this is your first time here, my name is Mark Hodge, and I'm head coach at Rockwell Trading. On a typical morning, Rockwell Trading's founder Markus is joining me, and with watchful eyes and almost 50 years of trading experience, we sift through a mountain of news websites, newsletters, and reports, and then we take the most important news and go live right here to share with you what you need to know as you approach the markets. So, well, let's I want to throw out a little tip right now, and this is actually because Marcus and I are in a little competition. So, quick side note: now's a good time to give this video a like. If you've followed the last two videos, Marcus and I, we've been in a little bit uh, of a competition here, and I just appreciate everybody who's watching the channel and joining us. And I know that with Marcus not being here, he'll get a kick when he sees a bunch of likes. So thank you for that. But let's jump in. Let's look at the charts. Quit messing around here. And I want to go to the S&P because yesterday the stock market really had a one-track mind. The focus was moving higher after last week's dreadful showing. The major indices started on a high note and held their ground throughout the session. We see here the S&P, we gapped higher. We rallied. The S&P finished higher by 2.5%. And we also had the Dow up 641 points, adding 2.2%. The NASDAQ leading the way, but really close to what was going on with the S&P. The NASDAQ finished higher by 2.5%. NASDAQ pulling away from session highs yesterday, just a little bit there. You see this on the bar chart where the S&P really closed closer to the session highs. If we go to a 5-minute chart, you see that it was really up and away, making session highs here, then going sideways, attempted to break through session highs, pulling back just a tiny bit, but a strong showing nonetheless. But there's plenty of negative news right now. And could it push the markets lower? Well, if you saw futures, we'll take a look at that. But the spoiler alert, it looks like it. So what's the negative news? Well, it's the fourth consecutive monthly decline in existing home sales, down 3.4%. We have central bankers pointing to the prospect of additional rate hikes really across the world, and reports that Shenzhen and Macau are seeing rising COVID cases, which we saw earlier with the supply chain issues and just productivity in China. That has a lingering impact on markets in general. So the question is this a short-term relief rally, or will we move lower to 3,400? And to be honest, both are possible. So if we look at the bigger picture here, a continued drop here is possible. And some traders are looking at around the 3,400. I know some investors and analysts are calling for this, big doomsday type scenario. But a drift down to 3,400, I think, is possible. The interesting thing is, although we're moving lower, it's pretty orderly. It didn't feel too orderly after the CPI data last week, but it's not this panic sharp drop. You have these moves up and down, and this is also why we're continuing to trade the wheel strategy and collecting nice premium, because it is a little more orderly. I want to show you the trade that I got assigned in the premium I collected at the end of this video. But let's move on to some stock movers here and some movers from yesterday. Energy stocks actually on fire after taking a hit over the last week. Let's look at ExxonMobil. ExxonMobil jumped 6%, trading at 91.48, finishing the day at 91.48. That is, shares of ExxonMobil rallied after Credit Suisse upgraded them to outperform from neutral. The firm said that ExxonMobil can jump another 45%. That's huge from current levels because the oil and gas company's divergent corporate strategy sets it up well to capitalize on the jump in oil prices. We also had Diamondback Energy, FANG. So FANG up 8% yesterday. The energy company shares rose after Diamondback's board approved an increase to its capital return program to at least 75% of free cash flow from its previous commitment of at least 50% of free cash flow. Big day yesterday. It does look like we're giving much of that back this morning, though, down almost 6%. Also, news from Tesla. We could look at Tesla here. Tesla, a nice day, up 9.4%, finishing back above 700. The EV maker shares climbed after Elon Musk gave a little more clarity on his planned job cuts that were announced earlier this month. You might have recalled that a memo or internal memo was sent that basically said that we had to cut jobs. Musk did clarify that, saying that the company will lay off 3.5% of the workforce, calling the amount not super material. Investors seem to like that, though. Up 9% pre-market, really kind of outpacing the overall market. And even today, even though futures are down, this dip is minor, not giving back a majority of the gains yesterday. Let's look at a few market movers today, or pre-market movers. And one of the stocks I want to look at is Lazy Boy. LZB is the ticker here. LZB up 7%. A big move here for Lazy Boy. Getting hit this year like many stocks, but a nice jump pre-market after the company reported better than expected earnings. The company reported record sales actually for the quarter and said it is focusing on reducing its backlog. So it looks like buyers want to buy Lazy Boy, and they need to get those supply chain issues resolved and get those orders fulfilled. But record sales in spite of the environment that we have with higher inflation. Let's also look at another one here. This is Revlon, and Revlon's been a really interesting story. Just wild swings. You could see that in May, it just was hammered. Actually, got down to it closed at $1.17 a share, and this comes after there were concerns that Revlon would file for bankruptcy and that they were having major issues with the company. But you see here, the last 2 days have been huge. And yesterday, Revlon finished higher by 62%. 62% higher. It did start the session off at $3.84 a share and closed at $6.06 a share. Look at this pre-market up another 35%, trading above $8 a share. So just a really massive volatile move with Revlon. It is an interesting story because Revlon is a poster child for what large, enormous debt and supply chain problems can do. This company has had to deal with debt. Now we're going into an environment where debt's just getting more and more expensive, but they actually can't get enough product. All right. So, is this a sign of what's to come with more companies where we have debt that needs to be financed at higher rates, and then also supply chain issues, not even able to fulfill orders to keep the company going? It looked like this one might be a goner if you look back at June 13th and where it finished, but investors feeling confident that there's enough support here with financing going through Chapter 11, and that Revlon can possibly make it through these issues. Anyway, I thought this was interesting. I'm not going to touch this. This is too volatile for me. This is really more gambling when I see this type of movement. I like to trade things that are a little more sustained, and like we talk about here at Rockwell Trading, SRC, profit, systematic, repeatable, consistent, rather than these home runs that maybe you catch from time to time, but you can't really rely on week to week, month to month. Let's look at another one. Let's look at Airbnb, ABNB, and Airbnb here down 3%. Airbnb, just like some other companies, having a tough time this year, dipping below the 100 level. And this is, lows that this company has seen since it released, pardon me, since it became a company, a public company. So a dip last week to IPO lows or pre-IPO levels. And we see here that we're down 3%. This comes after an analyst downgrade. JMP Securities downgraded the stock to market perform from market outperform, saying that increased demand after the pandemic is already priced into the company's stock. So dipping below $100 pre-market. Now, what's in store for us today? Well, let's go to PowerX Optimizer and look at the economic calendar. We see here that Fed Chair Powell is testifying. This comes at 9:30 a.m. this morning. Fed Chair Powell, Jerome Powell, will testify before Congress Wednesday and Thursday. His appearance comes after a recent rate hike by 3/4 of a percentage point, the central bank's biggest increase since 1994, in an effort to combat inflation that is at 40-year highs. Today, Powell will deliver his monetary policy report to the Senate Banking Committee. So this is something to watch. You usually have prepared statements, but then Q&A can get a little dicey at times, and that's what could potentially move the market, with investors clinging to every word that Fed Chair Powell says during the testimony. So keep in mind that that's going to be coming out at 9:30 a.m. We also have the follow-up tomorrow at 10 a.m. Before the House. After the bell, KB Home will report earnings, and this could be interesting with the renewed focus on the housing market because of inflation and interest on home loans essentially doubling in the last year. So that might be something to keep an eye on as well. That comes after the bell. Now, before we wrap up here, I want to talk about this Mastercard trade, the symbol's MA. And I mentioned that I sold puts on this last week. I sold the 315. I actually sold the puts. It was Friday, not last, but the week prior. And this is one where I really like how Mastercard has been moving this year, even going back to 2021. You see that it has some nice ranges. And it's really been stable, even though we've had a little bit of a dip recently. I really like this support. I like how this stock has behaved, and I was happy to take ownership at 315. So I was assigned. I sold puts to initiate the trade with the wheel, collected that premium, got paid to then buy shares at $315 a share, and yesterday, I was able to sell calls. There was a nice day. We actually opened up at 316. So now, based on my assignment price, I'm making money on the stock. With those calls that I'm looking to sell being slightly in the money, just a nice opportunity to collect some really nice premium. I got $635 per option, so $6.35, and that ended up being. We could go to our calculator here, and let me slide this over. So where is that at? I have a few. There we go. So Mastercard on the call side, I sold the 315, and I collected $6.25. And now with 1 day closer to expiration, if I was to collect 625, it would be a 238% annualized return. But yesterday it was actually 179% annualized. So liking that trade and liking that premium. Happy with this one. Down a little bit pre-market, but I feel very comfortable owning this at 315, and I believe that there's a potential to be selling calls for a couple of weeks on this, collecting some real nice premium, getting paid to own the stock, which is always nice. So that's going to do it for today's stock market update. I hope you enjoyed this video. And yes, Markus and I have a little like competition going. So if you like this video, it doesn't mean that you don't like Markus and I doing these sessions together. It just means that you're joining me to have a little fun and poke a little fun at Markus. So we want to crack the 400 like level today, so I could say, hey, Markus, haha, I got more likes than you. Always a little fun competition here at Rockwell Trading. Anyway, that's going to do it for today's stock market update. We'll see you tomorrow with Markus. And until then, happy trading, everybody.